So Hims and Hers have just reported their Q3 earnings and they have absolutely smashed it. These earnings are amazing, 10 out of 10. Probably the best earnings I have seen in the whole of 2024. They are that good. And today we're going to take a look at them. And also, hey, look at that, the poster's back again. It just gets better and better with age, this one. I think Hims and Hers at $3.11 is uninvestable. 13th of May, 2022, Andy Pickering. I tell you what, Andy P, if you want, send me your bank details. I'll give you some money for a pint because it'll help you get over this six-bagger that you just missed out. Let's get started. Now, just before we do get on to Hims and Hers earnings, just a quick reminder, there's the Webull promotion going on at the moment. I don't normally do promotions with Webull, but this offer is very good, and that's why I'm giving it to you guys, because you're going to get a ton of free shares. If you deposit the £100, you're getting nearly 10 free shares over 90 days, and if you do £2,000, you're getting nearly 30 free shares. Links in the description. Guys, I'm only doing this because it's a good offer for you. You're getting nearly £40 of free shares on the lower offer, and on the higher end, on average, you're getting nearly £80 of free shares on average, and sometimes even more. So go take advantage of that, guys. It's gone in one day, and I won't be doing any more of that Webull promotion, which some of you might be happy to see, but a lot of you have taken advantage of it. I think there's like 100 of you that have taken that offer up. So go get yourself some free money, guys. That's the reason why I'm doing it. But anyway, let's get on to the video that you come for. A full breakdown of Hims and Hers earnings. So good. 10 out of 10 earnings. Maybe even the best earnings I have seen them do as a shareholder. Now, you guys know I've been a shareholder for this company for around about nearly 3 years now. I've had my average is around about $6. I think I was the first YouTube creator on here to start covering this stock and stuck with it all the way. And yeah, for any of you guys that have been owning those shares, you're having a really good time at the moment. I think for me, my position's up over 250+% at the moment, and hopefully you guys as well are having good returns on that share price that you bought it at. And yeah, it's looking really good. I'm really happy with the stock. Financially, we're just seeing it continue to move in the right direction. That is what we want to see. That's the big thing I'm looking for. I mean, today, looking at the share prices, you guys will see this at like 5, 6 o'clock. I'm recording this about 11 a.m. The stock's moving anywhere between 5% to 10% up. I personally think this stock should have been up more today. We'll see what happens when you guys, I mean, obviously the election day as well might affect it a little bit with the volatility, but I personally think this stock should have been up more for these earnings. So you guys will see the outcome if it is up more or not. Let's get on to the numbers anyway. EPS. 0.32. I'm not going to lie, I was at a pub quiz when these earnings came out, and for a second I looked at the numbers and went, oh, that's all right, 0.3 EPS, not too bad. And then I went, hold on, there's a 2 after it. What's going on here? And I went, 0.32 what? Like, this is unbelievably good. Just to see the profitability exploding like that, we know the scale of efficiency is now kicking on with Hims and Hers. And that was at 0.27b on the EPS. To put that into context, that was a 540% beat on the EPS. That alone deserves probably a 15-20% jump on the share price. When we get onto the revenue and the guidance, it's even higher. That is unbelievable to see from this business. Revenue of 77% year-over-year growth, beat by 18 million. That it's just crazy beats, absolutely crazy beats. And the thing is, looking at this 77% year-over-year growth, the revenue isn't just growing, it's accelerating. I thought by now we'd start seeing the growth come down to the 40% range, the 30% range, and the growth is only getting faster and faster and faster. I mean, at the start of the year, a lot of analysts, you can go back on way back machine on the website and go on Yahoo Finance, and you'll see like most analysts were expecting like 20% growth this year. And we've just pulled off a quarter of 77% year-over-year growth. It's mind-blowing good. Mind-blowing good. Q4, they hiked up the guidance again, so it was a triple beat. They hiked up the Q4 guidance, they hiked up the full year guidance. I just put the Q4 guidance down. If you want the full year guidance, I'm sure you can go on Seeking Alpha and look at it. Q4 guidance was 421 million up to 467 million. Very good hike. Q4 EBITDA was 30% higher hike as well. Really, really good. They just keep beating. This is the amazing thing with this company. Is like, you're not just beating numbers, they just keep beating and extending the numbers that they're going to do. So it's not just a beat and raise, it's every time they just keep going and keep going. It's such a fantastic company to own. They now got 2 million subs. The sub growth was 44% year over year, which is good. Revenue per user, which is up 24%. Average order volume was up 48%, which I believe they said that they're not going to report this metric anymore in 2025. So maybe something just to kind of be aware of there. EBITDA went from 12 million up to 51 million. That's the scales of efficiency kicking in there. The growth to have there is just because they're now getting so big that we're starting to see the scale of profitability coming up. And this is what a lot of people didn't really realise. They didn't realise that as soon as they scale up, the profit that's going to be dragged up, you got profit growing faster than revenue now because they're getting that large, that all the efficiencies that they're putting in with all that spending they're putting on, like the likes of the G&A, the operations, the sales and marketing. All those efficiencies now are there. They don't need to spend as much now, and because the growth is there, a lot of it's just going straight to the bottom line, and that's why we're seeing the bottom line now exploding. And when you have this revenue growth and then the bottom line also growing even faster than the revenue growth, it's a beautiful combination. That's where you start seeing stocks. I mean, it's already up like 100 and something % year today, but that's where you just see them carry on exploding like that, which is great. Free cash flow went from 19 million up to 79 million this quarter. Cash, they're getting like a cash machine now. I mean, obviously because they're making so much profitability now, but they went from 96 million profitability last year up to 165 million in profitability this year. A cash on hand, which is great. They've got a lot of cash on that balance sheet now, and like the manager said, they can use that to reinvest in the company, and also will return it to shareholders with the forms of share buybacks. I thought, are they going to mention a little bit of an increase in the share buyback? They didn't. Obviously, they've still got one on at the moment, so maybe they'll wait until that kind of runs out and then increase it, or maybe by the end of the year they might top it up. We'll see what happens, but it just gives them so many options as well, maybe even acquisitions as well. Marketing was up 66 million, and this is always one of the big criticisms that Hims and Hers has had, and I think Unrivaled Investing did a video on Hims and Hers, and I did a response video to this, and he said, like, I don't like the marketing spend on it, and I was like, forget it, because the marketing spend is letting them in this right now, is acquiring customers, and as the scale goes up, the percentage of marketing to the revenue is going to come down, and that's what we've seen. A lot of people said like Hims and Hers is just growing because they're spending so much on sales and marketing, but as we see here, marketing was 66 million increase, but that translated into revenue growth of 175 million. So they're getting that scale of revenue as well from the marketing spend. Income went from negative 8 million to 22 million positive. Fantastic once again. The only thing I thought about was watching the expenses and stock-based compensation. The expenses went up a little bit once again, which I understand have to, because you're an expanding company and they're doing new categories, so they've got to put the money in there to support the growth. So I understand it. And then I actually worked out and I listened to the management team, and I put it down here, which is actually when you do look at the expenses, they are coming down as a percentage of revenue. So to be fair, when you look at the growth, they're actually the increase in spending is still coming down as a percentage of revenue, which is great. So I thought first, they're going up a little bit, and then I looked at the percentage of the revenue that is contributing to, it's actually down. So the negative that I did have, I've got to kind of cross out here. So yeah, really good. Stock-based compensation, obviously a few people are negative on this, but hey, if you want the best management team like Andrew Dunham, you got to pay him the money, haven't you, to be fair. And it also shows you, like, there's been so much fear put out there about, so-and-so's selling some shares. It shows you that people sell shares for many reasons, but they only buy for one reason, and that's because they think the stock is going up. So that's why maybe you don't get worried about people selling shares, because you look at these numbers here and they definitely weren't selling it because the company was going downhill at all. So yeah, really good. What was interesting is, I think it was Andrew Dunham, said on the conference call, GLP-1 shortage is only increasing. That's what they said. And now, obviously, they're going to say that from a point of view because they don't want that much restrictions on the GLP-1 and they want it to be the open market. But it's interesting that they said that, and they actually I didn't write them down, they posted some figures of the increase that they've seen in demand. So maybe there's a case that this GLP-1 shortage might be hanging around for a little bit longer. We'll see what happens. But obviously, there's been a lot of interest because of the GLP-1 situation at the moment with this stock. But actually, what they said is that we had 40% growth in subscribers without GLP-1s, which was very good. Because you look at this, the subscriber growth was 44%. So even without the GLP-1, that's still really good. And the numbers would have been really good. So that's good to see. We're not just a company that's going bonkers because of the GLP-1 that's going on at the moment. Fundamentally, even without that, the company is doing very well, which is really good to see. And they said that they did have 30 million, they bought 30 million of stock, and they've got 70 million worth of share buyback remaining. So they were quite aggressive this quarter buying back stock, which is good. I wonder if they're going to increase that with now, the profit they're making, the cash they're buying, which would be really good for us shareholders. And that was followed up by a statement which management said that we believe our stock price doesn't reflect the quality of the business. And I thought that's good, because they think, okay, maybe we need to start buying back some more stock here, more buybacks to get that share price going up a little bit, and that they are willing to do share buybacks at the moment. That's probably why they were quite aggressive on the share buybacks, and why they bought so much back at the moment. And I agree. I looked at this earnings here, and I looked at it with 48 forward times earnings, and I thought, 48 forward times earnings for this business here, this is by far the best numbers I've seen in 2024, and you're picking up for 48 forward times earnings. And I was looking at a company like Palantir last night that reported earnings, and I think their stock is up more today than what Hims and Hers were. And Palantir, the moat on the business is a lot stronger than Hims, no doubt about it. But I looked at the numbers that Palantir did, and I looked at the numbers that Hims did, and in my opinion, Hims' numbers were better than Palantir's numbers. And currently Palantir is something like 120 forward times earnings. It's nearly 3 times the valuation of Hims and Hers. And I thought, but the problem is Hims is growing over double, even triple what Palantir is. But yet the valuation on Palantir is nearly triple the valuation of Hims. And just looking at the big disconnect on what's going on here. Like, normally a company like this, and I know it gets a little bit silly sometimes when you start talking about, maybe it should trade at a forward P of 100. But when you do look at the scale of profitability and how quick they're growing into the valuation, that's the thing with growth stocks as well. When you're trying to value growth stocks, you can't value them off today's numbers, because very quickly they grow into that valuation so quickly. And when you look at the scale of profitability that they're doing, they're going to grow into a 48 forward times earnings so quickly that you start looking and thinking, you don't like throwing silly things out like it should be trading at 100 times forward earnings, but I do generally look at these numbers and thinking, well, if you're trebling your profitability in a year, then it doesn't actually look quite ridiculous from that point of view. And I looked at it and thought, yeah, Hims and Hers today is, $22, $23 stock it's going to open up at, or whatever it is. And I thought, what? I actually looked at it and thought, this could quite easily, realistically, it should be like even a $30 stock today. And I looked at it and thought, right now I looked at these numbers and thought, if I had the choice between buying and selling stocks, some shares here, I'll probably be a buyer of stock. They actually, when you look at the numbers here, that actually still stands out as being a very undervalued stock, which is exciting, because I was always hoping that, obviously I buy a stock and I always think it's going to get 100% return, that's why I buy a stock, but I always looked at Hims and Hers and I always thought, I would be disappointed if it didn't come a 5-bagger for me. Now, obviously, it's kind of on the way to being that 5-bagger status, but I'm looking at these numbers they're doing, I'm looking at the valuation, I'm looking at the beats that they're doing, and I'm thinking, I always thought I'd be really happy like if it did get to that 5-bagger status, and I'm looking and thinking, I personally think Hims and Hers right now, if they keep doing this for the next 5 years, I think they've got a 10-bagger status written all over them. So it's very exciting for the next few years, and I'm glad that this is my second largest position in my portfolio, and it probably should be my number 1 position, but hey, at least I bought at $3 is all I'll say. Hope you enjoyed the video, guys. Hit like button if you're around here, subscribe. I'll see you in a bit.